Welcome back to Market on Close. 10 minutes left, and equities solidly higher into the final moments of the session here. I want to bring in Shana Sissel, who's back with us here on the program. Shana, always a pleasure to have you here. I want to talk some of your favorite funds. I want to talk the broad market overall because we've got a pretty solid bounce again. And today it's happening on all the tech stay-at-home stuff. So what do you think here? Can this market stay bifurcated, like two-faced? One day it's reopening, the next day it's quarantine trades? Can we do that forever?
Well, I don't know if forever is the right way to explain it, but I certainly think we can do it for quite a long time. As long as the virus is still spreading, as long as it continues to be a problem, and as long as there's debate over the reopening strategies in different states, I think it's fair to say that we will continue to see days where it's risk on and days where we see risk off.
It's weird that our risk off days are still kind of like risk on in some way, though, right? Like the tech safety trade. Does that lose steam at some point, or are the gains for Zooms and Pelotons unlimited as long as we're worried about quarantine?
I think that there's still some upside in the tech sector as long as there's some quarantine going on. As more and more people kind of have ridden out the lockdowns and thought they've gotten through it, and now we're seeing second wave, they may reconsider doing more work from home. This may be something that we do longer than we ever thought we would. And so I do think that there's still some upside in a lot of those stocks. But I also think that it just becomes a trade of where you think the opportunity is, where the profits are going to be. And if you have to choose between work from home types of technology and communication services names versus, travel names, airlines, things of that sort, as long as the virus is with us, it's spreading and cases are growing, you're going to see this bifurcated market going back and forth.
Shana, right now, we've gotten this happening while there's still questions about what the cases are going to do, how much hospitalization there's going to be. So maybe this is why the market stays buoyant. What's it going to take in your mind to really have a true risk off, like a big pushback into bonds, the dollar, something maybe like what we got about a week and a half ago, but on a longer sustained level? What could set that up in your mind?
I think if you see the cases continue to grow in the South and in California and Washington again, and if you stop seeing declines in the Midwest and the Northeast as they begin to move further along in their reopening process, that would absolutely be a trade for risk off. And I think that there's some limitation there, of course, because the Fed and Congress and the government have also committed to putting stimulus into the system and support into the system. So I don't think we'll revisit what we saw in March. But I do think that if we start to see a sustained increase and you start to see the hospitals overwhelmed, I'm hearing that down in Texas, they're starting to see some issues. If that starts to happen and it becomes a headline again, you will absolutely see risk off again.
When you look at how to be in a market that does this kind of back and forth, I want to just keep covering one of the funds that you and I have been discussing, of course, for a while now. It still remains, I think, one of the best ways to look at this market. It had big volatility to the downside. It has big volatility to the upside now. What's going on here with BTAL? This thing will not drop for a longer period of time than like a week. Is that just connected to the kind of short-lived nature of our reopening hopes?
As I know we've discussed a lot in the past, that is an anti-beta fund. So it's basically a play on volatility and a play on low vol and risk on, risk off. So I know we've had discussions about whether or not there's any correlation with duration in bonds. But to me, this fund has very much performed in line with this risk on, risk off trade. So even when the markets are up or slightly up like we saw today, you have BTAL still doing well because it is a risk-off market, or leaning that way. And BTAL will do well when low beta, secure, quality kind of names with low volatility do better, which is what we've been seeing. And so this has been a great ETF to watch, to kind of get a feel for how the market is responding to the activity on the COVID front.
Yeah. On the year, we're still higher in BTAL. Obviously, it's shaved off quite a bit since the market started to come back, but not that much. I mean, the ETF is still up 7.5% on the year. What does that big swing at the at the beginning of this month tell you? How do you keep that in mind if it can get pretty volatile? How does that fit into an overall equity strategy or an equity allocation?
So we use it as a hedge. For us, it's our way of providing a hedge to our portfolios for downside risk or risk in general, risk on, risk off trades, whether or not the market's going up and down in our portfolios. We're very cognizant of the risk we're taking in the portfolios, and we're very uncomfortable with overweighting equities right now, but at the same time, we are very uncomfortable overweighting bonds because you have interest rates at zero, and really how much upside is there in bonds? So we're trying to find a way in which we can sort of hedge the risk of both things. And BTAL has been extremely successful in doing that for us. And it continues to be, as we've seen with this market. Yes, BTAL had a huge decline early in the month as risk was on. And you saw value in cyclicals really outperform for a period of time as it started to look like we had gotten the virus under control and the spread had been limited. But as we've started to see that that is not the case and that we are seeing a rise in cases in the South and on the West Coast, you've seen BTAL come back and strongly, I may add, even as the market's sort of gone back and forth. The market, I think, is down 3% for the year. BTAL is up 7. It was up 15 at one point, but still, it's a hedge. It's done really well when the market has been flat to declining or when low vol risk off trades are outperforming. BTAL has done well, and that's how we use it in our portfolios, exactly for that reason.
Okay, very cool. Shana, what about the other one here? Is that more focused on the bond side of the portfolio, serving some similar function? CPATX is the other one that I see in your notes, an income fund that's basically flat on the year.
Yeah, so that is exactly what that is. For our more conservative clients, we have BTAL as a hedge for equity. There is some hedge there for bonds as well. But the Counterpoint Income Fund is really a tactical play on fixed income where it looks for trends in fixed income. And it's either all in or it's in cash, depending on the trends it's seeing in specific areas of the fixed income market. So it's just another way for us to provide a hedge in our portfolio for our clients, depending on their level of risk tolerance.
Shana, great to catch up with you as always. Like the details here on how you're putting the ETFs to work. Shana Sissel, Chief Investment Officer at Spotlight Asset Group.